Hello traders, it's Khaled. Welcome to today's daily pitch, 8th of January 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Well, we will start with our economic calendar as usual and see what do we have as pre-planned economic events for today. Before we move and start analyzing today, we will be analyzing Dxy, gold, and Brent. Before that, I will make a quick check on the sound and then we can proceed directly. Okay, the sound looks good, so let's start with our economic calendar. As we can see, we had some economic data for CHF traders, the CPI, we had some economic data for the UK, and as well, moving on, we have the unemployment rate for the Eurozone, which is expected to stay the same at 6.4%. And we have today the initial jobless claims. The initial jobless claims usually doesn't hold too much weight because it is a weekly report. What will be more important and all the markets participants are waiting for is tomorrow. We have the non-farm payroll, unemployment rate as well. Tomorrow we will be discussing these in details. But as for today, there is not much of important economic data. Of course, we should keep our eyes on the headlines regarding any geopolitical tensions, any Fed members giving any comments. This could have an impact on the markets. So let's start with at first with Dxy. Let's have a general market look and see the general sentiment. Looking at Dxy, technically speaking, Dxy rejected the 97.6 and currently moving up. We could see as well a rejection at the 98.2. This drop, of course, is related to the markets pricing in that there will be rate cuts. We had some weak economic data as well, so that's why we are seeing this move down since November. As for the 10-year treasury yields, let's expand this a little bit. The treasury yields are rejecting the 4%. Several times the yields reach the 4% and moving higher, currently around 4.2. As for the VIX or the fear index, we are at the 15.7 level. We don't have any major fear in the market. Having a look at the Dxy chart specifically, well, I had this analysis before regarding some economic data regarding the FOMC meeting. I was saying that if we have a hawkish comments we saw, or in case we have something neutral or a dovish comments, I was making these scenarios. I'm going to delete them and see what could we have for Dxy. Regarding Dxy, I will be monitoring this level a little bit higher to see if we are able to reject. In case we reject the 98.5, I'm going to say we could be moving a little bit lower down to the 97.5 once again. The 97.5 is an important area. Looking to the left, several times we had a rejection here. 1, 2, here we respected this area, here we respected this area. So in order to break this level, we need a fundamental catalyst, which I believe could be tomorrow, especially the unemployment data. If the numbers are worse than expected, the non-farm payroll and unemployment data, this could signal that the Feds will lower the interest rates and we could be moving lower, and we will watch the reaction at this level. In case we will break, we could be going back here to the 96.2, a very important level, the 96 to the 96.2. Zooming out, very strong rejection, very strong area that has been holding since July 2025. We tapped here, rejected, and I believe in order to break this level, we need a really strong economic data or fear from the US dollar, so we could break the 96, 96.2 and move down to the 95. The next scenario on the Dxy, in case we broke higher, well, breaking and closing above the 98.6, I will be looking at my next target. I will be moving this a little bit up. My next target could be here. Let's zoom in a little bit. I will monitor these candle highs at the 99 level. It's a very important level. As you can see as well, technically speaking, several rejections here as well, So I will monitor if we can see such price movement. But of course, I believe that the volume and volatility could be today slower, especially on the dollar index and the dollar pairs. Everyone is waiting for the economic data we have tomorrow. We will see the numbers if they are similar to expected, higher or lower. Tomorrow we will have a quick session as well where we put the scenarios and see the impact on the DXY and on gold as well. Moving on to Brent and having a look at Brent prices. Well, speaking about Brent, a lot of people were expecting Brent to move up due to the geopolitical tensions we saw during the weekend. Well, if we analyze the event that took place, I also said an update on the Telegram channel. Venezuela is one of the biggest countries that has the biggest oil reserve in the world. But production side, they are producing around only 1% of the oil worldwide. And in addition to that, the US president was very clear that whenever they took over Venezuela, we can say, or the president, they took the president, the US president said that they will be selling Venezuelan oil. So this means that there is no issue with the supply. In addition to that, there is additional supply in the market. That's why we didn't see oil prices moving up. But as well, we didn't see oil prices melting down. Why? Because in order to increase the production of oil supply in Venezuela from 1% to previously it was around 3% of the worldwide supply, this will not happen in a very short period of time. This needs a lot of time, investments, and a lot of work on the infrastructure. So that's why we can see that in general, the price on oil was muted. We didn't have a strong move, and currently we are at the 60 level. This is fundamentally speaking. Technically speaking, I will be looking at the following. The first area of interest for oil, let's zoom in a little bit. In case we are able to break below these candle lows, breaking below the 59.5, I believe we could be digging lower to the 59 or 58.8 approximately. So if we have something like this, we could be testing these candle lows at the 58.8. The next scenario, what if we are able to break above the 60.8 level? Well, I will be marking this level as well. Price moving up, breaking higher, candles closing at here. The next candle making a lower wick retesting. I believe my next area of interest will be at the 62 to 62.2 approximately. This one could be adjusted a little bit. You can see previously that the prices were a little bit messy. Candles having a lot of upper wicks and lower wicks. I will keep it simple on Brent oil. I don't have too much trade ideas. Some specific price level I will be marking, putting alerts, and that's it. I won't be opening the chart for a long period of time. The last scenario, what if we broke higher? Well, breaking above the 62.3 to 62.5, my next zone that I will be targeting and keeping an eye on is here, these levels, which is around the 64 level. Reaching the 64, I believe we should watch out for the price action. In case we see candles starting to reject or the bullish candles getting weaker, or we just see like a consolidation here, this could indicate for us that the buyer's momentum is not enough, and we could be trading lower once again in such price movement. Of course, whenever we reach this price level, it's a very, very, very important price level, the 58.8. I would like to see price reaching here and showing us a rejection in order to take advantage. At least you have a range to take again to the 60.9 or 61 if you want, which is more like a flat number. These are the scenarios on oil. Keep an eye on the news and especially the geopolitical tensions, which could heavily impact Brent prices. Right now, let's move on to gold. Before moving to gold, anyone watching the stream, if you like our content, don't forget to leave us a like, comment, and share. We will be sharing additional trade ideas, analysis, more up-to-date economic data. In addition to that, join our Telegram channel. You will find a link for our Telegram channel pinned in the comment section. There we share more up-to-date economic data and more analysis. Let's move on to gold and see what is happening. Well, of course, gold took the advantage of the geopolitical tensions and the price moving up. It broke above the 4,500, printed around 4,550. Once again, it tested the 4,500 during this week, and currently we are seeing some profit-taking moves. For gold, I have several areas of interest that I will be marking as well. The first one, which is a very important level at the 4,400. And to be honest, this is the scenario I would like to see. This is my personal bias. I would like to see price retesting this level, candles failing to break or just having a lower wick or just consolidating like this before taking advantage of such movement. And here you have a beautiful range with first area of interest at 4,460. And in case we are able to break higher, I will be looking at the 4,500 level as well. This is the first scenario I would like to see on gold. The second scenario, what if we broke lower? Well, in case we are able to break below the 4,400, I want to see a bearish intraday candle closing below this level. I would like to see an intraday candle closing below this level. The next candle making an upper wick, failing to break above the candle here, and then start to flip bearish and break below the low of the previous candle. In this case, this could be a confirmation that, okay, we are having a break and retest. And in this case as well, my next area of interest will be around the 4,280. Zooming out, we can see that here we had several reactions, 4,400. And here as well, we have several reactions at the 4,280. We can see price consolidated, broke higher, retested and retested again. And here it was a beautiful reaction at this level. Although I didn't take the trade because of the market timing, it was like the last trading day of the year. And to me, it's not the best. There was a lot of volatility, spread, candle spikes. So not the best timing for me. But for now, these two areas I am focusing on, the 4,400 and the 4,270. In case we reach this level, I find that candles are not able to break lower, I will look for such price movement. That's it for the trade ideas for me on gold. As I said, watch out for the volume and volatility. Maybe we could have slower markets today due to tomorrow's important economic events. So in case you don't find any opportunities, just skip trading, come tomorrow more fresh, and we will see some more trade ideas and analysis with our next session. Thank you so much for joining, and we will see you soon.